Hey, good morning. So, in this lesson, we try to see another thing. I don't use a company fundamentals to trade stocks. Okay, why is that? A company fundamentals means it's filing to the Security Exchange Commission. It means um, if it is listed into an exchange, this company, for example, let's say Facebook, it is listed into an exchange, okay? Now, it must file um, information about the company each quarter, okay? And it gives all the information about the company. Is it doing good or is it doing bad? Is it making money or losing money? Okay? So each company listed in exchange, let's say New York Exchange or Nasdaq, should tell the investors how is it doing. Is it doing good? Is it doing great? Or is it losing money? Now the company files and gives numbers to the public. Okay? This you can go online and you can just search for company profile, and then there are a lot of websites that you can find information. If you go to Yahoo, let's say Yahoo Finance, okay, you will find every company and its profile. Now, so do you think if a company is losing money, it will tell it directly to the public and its investors? Do you think that when a company is losing money or having trouble, it will just give information, bad news to the investors? Obviously, no. Because if it gives bad news, almost all the investors, they will sell, and the company will lose a lot of money, and the price will decrease, okay? And the company will be worth nothing. That's why they don't tell the truth. So for this reason, in our strategy, we don't use any company fundamentals. We don't use any information, okay? Because we know that most of the time there is something wrong. If there is something wrong, they will never tell you, okay? Now, what we look for is the price only, as described before in the previous lessons. Okay, so for us, we just see the price. If it is going up, the company is making money. If it is going down, the company is losing money. Whatever they tell you, if the price is going down, whatever they tell you that the company is doing good, don't believe them. Okay, some companies lied to their investors. This is a fact. It's not something that just I come up with. So I will give you the proof. So if you want to know more, please go to this website or just Google it. Okay? Thanks. So we will go to this website. You can find a lot of websites. Okay? So the 10 worst corporate accounting scandals of all time in America here. Okay? Now, let's say this company. It's called Waste Management Scandal, 1998. Okay? So, what happened? It reported 1,500,000,000 in fake earnings. It says to their investors that we have made $1,700,000,000, okay, in earnings. But they don't. Okay? So this is the problem. Now another company, Enron scandal. This is very famous in Wall Street. It's very, very famous. So the shareholders lost $74 billion, okay, because this company lied about the earnings. Okay, so I'm not going to someone like penalties. They get 24 years in prison. Okay, but if you lose all your money, if they put someone in prison or no, it's over, because you can't get this money back. It's gone. Okay, it's gone forever. If you put 100,000 in this company and it goes bankrupt, your money is gone forever. No one will give you your money back. Okay, so thank you very much, and have a nice day.